XRP just dropped 16% in 1 month despite having multiple spot ETFs approved, $1.2 billion in ETF inflows, and the SEC dropping its lawsuit. While Standard Chartered predicted XRP would hit $8 by 2026, the price crashed to 1.87. And here's the terrifying part. This isn't a technical correction or a bear market casualty. This is institutional manipulation at its finest. Large holders are dumping millions of XRP into ETF demand. Chinese mining operations are liquidating positions. Major exchanges like Binance sold over 7,000 coins in coordinated sells. The Fear and Greed Index hit 20, extreme fear territory. And retail investors are asking the worst possible question: should I buy this dip, or is XRP actually dead this time? Welcome back, and if this is your first time here, hit subscribe immediately because today we're uncovering what's really happening with XRP right now. Not hopium, not conspiracy theories, just cold hard data about why XRP is bleeding while Bitcoin ETFs print billions, why institutions are accumulating while retail panics, and whether this fear-driven dip is the opportunity of the year or a value trap that will destroy portfolios. By the end of 13 minutes, you'll know exactly what smart money is doing right now and whether you should follow them or run. Let's get into it. Let's start with the brutal reality that nobody wants to talk about. XRP is currently trading at 187, and technical sentiment is bearish with the Fear and Greed Index showing 20, which is extreme fear. But here's where it gets interesting. XRP is down almost 16% month on month, yet spot XRP ETFs have reached $1.2 billion in assets under management with zero net outflow days since launching. Think about that for a second. Institutional products are seeing uninterrupted demand. Billions are flowing into regulated ETF products. The SEC approved several spot XRP ETFs and dropped its appeal against Ripple, eliminating the major legal headwind. Ripple CEO Brad Garlinghouse predicts XRP will capture 14% of Swift's payment volume within 5 years, which represents over $20 trillion in annual transactions. Yet the price is collapsing. This creates a fundamental question that separates investors from gamblers. Is the market wrong, or are you missing something critical? According to technical analysis, XRP is forecasted to drop to 1.93 by January 20, 2026, with the RSI at 4350, indicating a neutral market position. All moving averages show bearish signals, with the 50-day and 200-day moving averages falling since November and December. This isn't random volatility. This is a coordinated pressure pattern, and understanding why this is happening will determine whether you profit from this moment or get destroyed by it. Here's what's actually causing the dump, and I promise you this isn't what you've been hearing on Twitter. First, large holder liquidation. Analysis from multiple outlets shows that Chinese Bitcoin mining operations have been selling thousands of Bitcoins, and the same pattern is affecting XRP. Major players, including Binance, sold 7,106 XRP in coordinated transactions, while Wintermute, Coinbase, and Fidelity sold over 6,400 combined. These aren't panic sells from retail traders. These are calculated institutional exits or rebalancing moves. Second, the supply-demand paradox. The most important dynamic is this: demand and supply can both be strong at the same time. ETFs add consistent demand, especially with uninterrupted inflows, but other market participants can sell into that demand, including profit takers, legacy holders, or large wallets, reducing exposure. Think about it logically. If you're a whale who accumulated XRP at 50 cents during the bear market, and institutional ETFs now provide guaranteed liquidity at $2, what do? You sell into that demand systematically without crashing the price too fast. Third, broader market fear contagion. The overall crypto market cap dropped 0.04% to $2.98 trillion, with trading volume down 48.48%. When Bitcoin shows weakness and fear dominates, altcoins like XRP get hit harder regardless of fundamentals. Fourth, technical resistance and profit taking. XRP saw a 42% volume drop recently, threatening its next move despite recovering from 1.77 to 192. The $2.00 level acts as psychological and technical resistance, and every time XRP approaches it, sellers step in. This creates a pattern where bulls get exhausted trying to break through while bears have a clear level to defend. Now let's talk about the ETF situation because this is where most people are confused. 21 shares XRP ETF trading under ticker TAXR, received formal listing approval from CBOE BZX Exchange and will become the fifth spot XRP product. Ripple Markets seeded the fund with 100 million XRP, roughly $226 million. As of December 20th, U.S. spot XRP ETFs approached $1 billion in cumulative inflows less than a month after launching, with no net outflow days. This is actually unprecedented. For context, when Bitcoin ETFs launched, they had massive volatility in flows, with some days seeing hundreds of millions in outflows. XRP ETFs have had zero. Every single day has been net positive inflows. Rex Osprey's XRPR is already trading and marks the only fully approved spot XRP ETF as of late October, but 5 more spot XRP ETFs from Franklin Templeton, Bitwise, Canary Capital, 21 Shares, and CoinShares appeared on the DTCC, signaling imminent approval. So why isn't this pumping the price? Because the market already priced in ETF approval during XRP's run from $0.50 to $2.50 earlier this year. XRP gained more than 400% during the past year, and the expectation of ETF approval played a large part in that surge. But as is often the case in crypto, the rally happened before the news broke, and XRP actually fell in the weeks after the SEC announced the end of their lawsuit. This is classic buy the rumor, sell the news behavior. Institutions accumulated during uncertainty when retail was scared. Now that certainty arrived and ETFs are live, those same institutions are taking profits into the liquidity that ETFs provide. Let's talk predictions because you need to know what serious analysts are actually saying, not what moonboys on Twitter are screaming. Jeffrey Kendrick at Standard Chartered Bank estimates XRP will reach $8 in 2026, implying 315% upside from the current $1.90 price. His thesis is based on increased regulatory clarity and spot XRP ETF approvals boosting adoption. But even bullish analysts acknowledge problems. The forecast seems overly optimistic, especially when XRP has fallen 7% year to date, despite the Trump administration's support for crypto. The Motley Fool suggests a more reasonable target of $3 in 2026, which implies about 58% upside. Citi analysts predicted Bitcoin would reach $143,000 in 2026, but Standard Chartered recently reduced its Bitcoin target from $300,000 to $150,000, showing even institutional predictions are getting more conservative. Technical models suggest XRP could rise 15 to 20% to approach 235-245 by the end of December 2025 if market conditions stabilize. But longer-term predictions show XRP potentially reaching $280-360 in 2026, which is far below the $8 moonshot prediction. CoinCodex's algorithm forecasts XRP will gain 44.68% in 6 months to reach $2.81 by June 2026. Here's the pattern. Conservative analysts see 50-100% upside over 12 to 18 months. Aggressive bulls see 300% plus to $8. Both agree the path isn't straight up. What does this mean practically? If you're buying today at $190, realistic upside over the next year is $280 to $360, representing 47% to 89% gains. That's solid but not life-changing. The $8 scenario requires perfect conditions, mass institutional adoption, swift integration at scale, and a broader crypto bull market. Possible? Yes. Probable? History says no. Now the million-dollar question, should you buy this dip or wait for further downside? Let's break this down with cold logic, not emotion. The bull case for buying now. The Fear and Greed Index at 20 represents extreme fear, and historically these moments have been excellent buying opportunities. ETF inflows remain strong with $1.2 billion in AUM and 0 outflow days, showing institutional conviction. The SEC dropped its appeal against Ripple, removing the primary legal headwind that suppressed XRP for years. Ripple CEO's prediction of capturing 14% of Swift volume represents massive fundamental upside if achieved. Ripple received preliminary OCC approval to establish a national trust bank, further integrating into the U.S. financial system. Technical support exists around 185-190, and selling pressure collapsed 39%, suggesting sellers are losing control. The bear case for waiting. All major moving averages show bearish signals with price trading below the 50-day and 200-day EMAs. A 42% volume drop threatens momentum, and low-volume rallies typically fail. Large holders continue selling into ETF demand, creating resistance every time price approaches $2. Technical analysis shows XRP remains in a sustained downtrend with repeated rejections near 2.05. Broader crypto market remains weak with Bitcoin struggling and fear dominating sentiment. XRP has fallen despite a growing acceptance of crypto, while Bitcoin ETFs attract massive flows, suggesting XRP-specific weakness beyond general market conditions. Here's my honest professional assessment based on the data, not hopium. XRP is in a consolidation and distribution phase where early adopters and whales are systematically exiting into institutional ETF demand. This creates a ceiling around $2 that's difficult to break in the short term. The market's key question isn't whether ETFs exist, it's whether ETF demand can outpace the supply being sold into rallies. Right now, the answer is no. However, this doesn't mean XRP is dead or a bad long-term hold. The recent ETF approvals are the most compelling reason to want XRP exposure, as institutional demand from well-capitalized groups could send prices higher. The problem is timing. If you buy today at 190, you might see it drop to 170 or even 150 before the next leg up begins. Predictions show potential downside to 193 in the next month, but if support at 185-190 holds and market sentiment stabilizes, a move toward 235-245 is possible by year-end. The smart money strategy isn't all in or all out. It's scaled accumulation on weakness with clear risk management. If you believe in XRP's long-term thesis of capturing cross-border payment market share, this fear-driven dip represents opportunity, but not necessarily right this second. Cracks are starting to appear in selling pressure with momentum indicators suggesting sellers are losing control. When that selling exhaustion combines with continued ETF inflows and a stabilizing broader market, that's when the next sustained move higher begins. Let me give you the actionable framework professionals are using right now. For aggressive buyers who want immediate exposure, enter small positions now at 1.87, 1.92, set stop losses below 1.70, and plan to average down if it drops to 1.75 or 1.65. Your thesis is that fear is overdone and a bounce to $2.20, 2.40 happens within 4 to 8 weeks. For conservative accumulators who want better risk reward, wait for a confirmed break and hold above $2 with volume, or wait for capitulation down to 165 to 175 if the market gets worse. Enter in tranches, not all at once. Your thesis is patience gets rewarded with better entries. For long-term holders already in XRP, if you're profitable, consider taking partial profits above 2.00 on any bounce. If you're underwater, average down only if you have conviction and capital you can afford to lose. Don't hope your way out of a bad position. For those sitting in cash watching, XRP will give you another clear entry. Either it breaks $2 with conviction and volume, confirming strength, or it capitulates below $1.80 with panic selling, presenting a fear-driven opportunity. Right now, it's stuck in no man's land. The worst decision is buying impulsively because you're afraid of missing out or selling in panic because red candles scare you. Technical coverage suggests that a decisive close above 196 could increase odds of pushing to $2 or risk another fade back to mid-180s. That's your decision point, breakout or breakdown. Until one happens clearly, the middle is the danger zone. Here's the ultimate truth about XRP right now that separates winners from losers. XRP is not in a bull market. It's not in a bear market. It's in a transfer of wealth from impatient hands to patient hands. The market has seen manipulation patterns since October with daily pump and dump cycles designed to liquidate positions. Institutions that accumulated at 50 cents are systematically distributing at $2 into ETF demand. Retail that bought at $2.50 is panic selling at $1.90. And smart money is waiting for capitulation to accumulate again before the next institutional adoption catalyst. The reason XRP feels frustrating is because it operates on institutional timelines, not retail gambling cycles. Banks and payment companies don't adopt new settlement infrastructure in weeks or months. They pilot, test, and deploy over years. XRP is designed to facilitate fast and cheap cross-border transactions as a bridge currency resolving Swift's pain points. That thesis hasn't changed. What changed is that the easy money from lawsuit resolution and ETF anticipation has been made. Now comes the harder phase, proving actual adoption at scale. XRP has over 30% market share of made-in-USA cryptocurrencies, dwarfing competitors. As a smaller market cap asset with tremendous growth opportunities, XRP could be overdue for a strong rally, especially if crypto acceptance increases in 2026. But that rally doesn't start until selling exhaustion completes and a new catalyst emerges. Right now, we're in the exhaustion phase. Weak hands are being shaken out. Impatient capital is rotating elsewhere, and when everyone finally gives up and declares XRP dead, that's usually when the next leg begins. So here's your final answer: buy the dip or wait. The honest answer is it depends entirely on your time horizon, risk tolerance, and conviction in the thesis. If you're a trader looking for quick gains, XRP right now is a coin flip with no edge. Wait for a clear technical signal above 2.0 or below 170. If you're an investor who believes cross-border payments will be tokenized and XRP will capture market share, accumulate on weakness over the next 3 to 6 months regardless of short-term price action. If you're uncertain and just following hype, don't buy anything. Uncertainty with capital deployed is how you lose money. XRP needs more than ETF approvals to drive another significant rally. It needs to take a piece of the global payments pie. That's the long-term game. Standard Chartered's $8 prediction is based on adoption acceleration, but even bullish analysts acknowledge the path is uncertain. What's clear is that XRP at 187 with $1.2 billion in ETF assets, SEC clarity, and institutional banking integrations is fundamentally different from XRP at 187 during the lawsuit uncertainty of 2023. The asset is de-risked legally. The question is whether adoption accelerates fast enough to justify current valuations or higher. My personal read: this is a 6 to 12 month accumulation opportunity for those with conviction, not a get-rich-quick trade. Institutions will keep building, retail will keep panicking, and those who understand the difference between price and value will be positioned when the next major catalyst hits. That's the truth about XRP in the fear market. No hopium, no FUD, just data-driven analysis of what's actually happening. If this video gave you clarity instead of confusion, hit that subscribe button because we do this for every major crypto asset. Drop a comment with your honest take. Are you buying this XRP dip, waiting for lower prices, or moving on to other opportunities? I want to hear real opinions, not echo chamber nonsense. Thanks for watching, and I'll see you in the next deep dive where we keep separating signal from noise.